Holy moly, stocks are what I would call crashing today. The Nasdaq is down about 2.3% at the time of recording this video, breaking under a major level in which you could see a lot more downside from here. We have earnings coming today and after hours, some big earnings tomorrow that are also going to drive the markets, not to mention that infamous GDP report coming out tomorrow. And I say infamous because we're expecting a crazy number here. So I want to talk about our markets and what in the world is happening today. We do have some breaking news coming out of the Middle East. This conflict is likely about to take the next stage of escalation, and this is one thing that is affecting our markets. Now, you might be a little relieved to find out that the option activity in Tesla is again very strong, and Tesla is down less than 1% today. For a majority of the day today, Tesla was actually in the green. You are seeing a massive outperformance of Tesla. Maybe some big news is coming soon for Tesla. Maybe someone somewhere knows something about Tesla. We're going to get into all of it here in this video, give you guys the latest news, technicals, and analysis that you need to know on our markets, as well as Tesla stock. Hit the like button if you are an investor in Tesla stock today, as well as subscribe to the channel if you want to reach financial freedom, or at the very least, bare minimum, stay up to date with what's going on with Tesla stock, as well as the broader markets each and every single day. After you leave these videos, I promise you, you will be a more informed, more educated investor and or trader, and it will help you make more money. And last but not least, if you guys would like to come trade with us live in real time and get access to all of the trades that I make, I send out alerts the second I make trades. Link down below in the description of this video. It also helps support the channel and make these videos possible. Come join a community of over 50 different members, learn how to trade, learn how to hedge out your portfolio, and protect yourself for that downside that we are seeing here today. So here in this video, we do have a lot of news to get into in regards to the markets, in regards to yields today on treasuries, the Middle East, Tesla specific news. But I really want to start off this video with a simple message here. Tesla hit a low of $202.51 on October 23rd. That was 2 trading days ago. Yet in that course, you have bounced almost $20, over $20, to hit a high of $222 yesterday, a high of about $220 today, and you are finding support around that 200-day moving average. There is a lot of positioning in Tesla right now. There's a lot of bulls that are bullish on Tesla right now. Besides what you see happening in the markets, besides what Tesla has done over the past week or so, there is a lot of people that are buying the dip right now in Tesla. And I think it's because 2024, when the Fed does start to cut rates, Tesla is going to be a net beneficiary of that, whereas Tesla has been a net loser when the Fed has been raising rates the last 18 months or so. But I would like to start this video by saying Tesla stock is bullish in and of itself. I'm bullish on Tesla by itself. If the markets do come down here and you continue to see really bad days in the markets, Tesla stock doesn't have to crash. It doesn't have to have its normal beta of 2x the Nasdaq. If that was the case, Tesla would be down over 5% today. That doesn't have to happen, but Tesla stock would continue to fall with the broader markets, even if people are really buying the dip in Tesla. And we have actually reported this the last couple of days. The option activity in Tesla has been very, very strong. Today has been another pretty good day for Tesla as far as option activity. The last about 10 minutes or so, you have seen a lot of big negative positions come through. Now, a lot of these I've noticed, they go in and they get closed out by the end of the day. So it's not a lot of that long-term kind of bearish positioning. Take a look at some of these trades. 19 million. 17 million, 27 million, 28 million, 169 million, 105 million, 3 million, 4 million, 3 million, 34 million, 9 million, 38 million, 8 million, 6 million, 4 million, 31 million, 2 million, 4 million, 50 million. These trades have come through within the last 10 minutes or so. The option activity has went from $300 million to $1.55 billion within the last 10 minutes. You were at a positive order value of 70%. Now you're at a positive order value of 45%. By the end of the day today, by that 9 p.m. update we normally give you guys, you're probably going to see $2 to $4 billion worth of options placed on Tesla stock today. So what you're seeing right now are some of the early numbers, and they are looking huge for Tesla. And like I say all the time, in between 45% and 55%, I consider pretty neutral. Technically, 50% positive order value is right on neutral, but in that range is okay. Once you get higher than 55%, in which you've been like 70%, 75% the last couple of days, even when Tesla stock was falling 10% following earnings, that was very strong. If you do see an end of the day total under 40% or 40% or lower, that's not going to be a great sign going ahead. And that probably simply put means expect more downside for the broader markets. Let's now get into what is affecting stocks today and then all of your Tesla stock news. So there are a number of things that are affecting stocks today. You could point to treasuries as a big one. TLT, which is the 20-year treasury ETF, is down 2.4%. As this chart goes lower, that means yields are going higher. 30-year treasury yields are now sitting at 5.085%, up almost 12.5 basis points today. 10-year treasury yields are back to 4.94.5%, up 10.5 basis points today. Two reasons this could be happening today. Number one, new home sales came in at 0.75 million. You were expecting 0.65 million. So new home sales came in higher than expectations. New home sales month over month were expected at negative 11%. Your number came in at positive 12.3%. This shows real estate is even hotter than investors thought. That supports the Fed may need to be higher for longer, because if you're not feeling stress in the real estate market when interest rates are 8% and it is an arm and a leg to close on a house. My house right now that I'm looking to buy for a rental is $25,000 to close on. That's with $7,000 back from the seller. So it would be over $30,000 plus inspection, plus appraisal, plus insurance costs. You're looking at about $35,000 to close on a $200,000 house. If you're still seeing that kind of activity in real estate, even though it's that expensive to close or just buy a house in general, yeah, the Fed might need to be higher for longer or higher forever. Second reason is your 5-year treasury auction came in at 4.89%. Your last auction came in at 4.65%. So a move higher of about 25 basis points, which does make sense. To me, at least, why treasury yields are following suit and also going higher. The third thing that I would add is tomorrow we are going to get our Q3 GDP number. Now, quarter over quarter, you're expecting over 4% growth. Markets might be looking at that and saying, hey, we're probably going to come in at 4%. If we don't even come in at 4%, it's probably still going to be in the high threes at the very least. That's going to mean higher for longer. We're going to get ahead of that data report tomorrow and go ahead and sell treasuries and cause yields to rise. After all, maybe someone knows what the GDP report is going to be. We're going to talk about the GDP report coming out tomorrow in a little bit more depth and detail in the video at 9 p.m. tonight, so stay tuned to the channel for that one. That's going to be a video you do not want to miss. Other reasons why stocks are falling today, you could point to Turkey's stock market. They closed down 7.1%, the worst day since February of this year. So broader markets also did not do well. The CBOE said early in the trading day there was a problem with options, and options were not trading for about 15 to 20 minutes. And then they came back. So that bounce you seen in the beginning of the day, that was because options were not trading. So when you're not seeing puts being bought, it's pretty easy for stocks to go higher. These kind of shutout events usually create a little more uncertainty. Why did that happen? And that's also not helping our markets. But by far, what is causing stocks to drop so much today is Google earnings. Google is down 9.8%. A very rough day for Google. Microsoft is up 2.73%. The sympathy moves that you're seeing to Google is not enough to get offset by Microsoft being green. Investors went with the Google side of earnings and are running with it. Meta is down 4% heading into their earnings in after hours. Even though Google earnings were pretty dang good, I would be excited about those earnings if I were a Google investor, in which I'm not. Investors still sold it off. And Google is about 6% weighting of the NASDAQ. So that plus the sympathy move is not great. This also isn't the greatest heading into the rest of earnings season. It really puts a precedence on if you are Google and you barely miss on cloud and you sell off almost 10%. If you're a different stock and you miss even a little bit, you could get destroyed. So it's not setting a good precedent. But also, let's be honest with ourselves. The S&P 400, the S&P 600, really your small cap stocks, are trading at historically low PE multiples. This is a chart of exactly that. The S&P 500 is in red, the S&P 400 is in blue, and the S&P 600 is in green. The S&P 600 is trading at 11 times 11.7 PE for next year's earnings. What do you notice about this chart? Basically, any point in recent history, the green and the blue lines are above the red line. But in this market environment, investors have not wanted to own your small cap stocks, which they have a very low percentage of the S&P or the NASDAQ. So the broader indexes have soared higher as investors have bought the Magnificent Seven, really the top 10 stocks, top 10 biggest stocks in our markets. This has never happened before. At least, again, in recent history, the last 20 years or so, where S&P 500 valuations are way higher than small caps. It's because of those, 10 top stocks. Well, now that you're seeing Google falling, you're seeing a lot of your other top 10 stocks for the S&P falling. It could have a very violent downside reaction to the indexes themselves. And that is exactly what you're seeing today. Whereas your small cap stocks, they've already gotten beaten down. They haven't bounced basically at all. Well, now they might not fall as much as the broader indexes. This could be an index level crash. Whereas maybe your small and mid cap stocks, maybe some of the stocks you and I invest in, like a Tesla, that's still down over 50% from all-time highs, maybe those stocks are not going to fall as much. It's interesting. Maybe that's why Tesla is actually doing well today. So the way I see it, from here, there's two things that can happen. Either S&P 500 comes down to match the valuations of the S&P 400 and 600, which I think is a little bit more likely, or the S&P 400, S&P 600 rise to match or exceed the valuation of the S&P 500, which I think that only happens if we get rate cuts, or I guess when we get rate cuts. And if you're not expecting that in the near term, well, S&P 500 probably needs to come down considerably from here. The Middle East conflict is definitely not helping our markets as well. The IDF Homefront Command has just released an order for all residents who have not evacuated and are still near the Gaza Strip to remain near bomb shelters until further notice. Netanyahu confirms that there will be an Israeli ground invasion of the Gaza Strip with two goals: destroy Hamas and rescue hostages. says that the chief of staff and the war cabinet have scheduled a start time. And again, here's another headline. Israeli Prime Minister Benjamin Netanyahu has announced that the date for the ground invasion of the Gaza Strip has been set. So there is no longer a question of whether or not this is going to happen. It looks like it's going to happen. Earlier reports suggested that this ground invasion has been delayed by the US and Israel to allow the US to put more missiles in a defensive posture in the region, as well as air defenses. And here is that headline. Both U.S. and Israeli officials have now confirmed that Prime Minister Netanyahu has agreed to delay the invasion of the Gaza Strip until the U.S. military is able to move more assets into the region, including at least 12 air defense systems for the interception of cruise and ballistic missiles, as well as rockets and drones, which are set to be spread across multiple countries in the Middle East, including Bahrain, Iraq, Kuwait, Saudi Arabia, Qatar, and the UAE. This is news that we had got days ago. So this looks like old news. This is probably the reason you have not seen that ground invasion yet. And really, it could now be coming at any time. That's not exactly comforting for the markets. A meeting of the political security cabinet has been convened in Tel Aviv following the statement by Prime Minister Netanyahu. The U.S. operations base at Hajar Airport in northeastern Syria has reportedly just come under rocket attack. As a rocket attack was underway against U.S. forces in northeastern Syria, President Biden was stating during an interview regarding recent attacks on U.S. troops by Iranian militias, quote, "My warning to the Ayatollah, I don't know if they mean Hezbollah, was that if they continue to move against those troops, we will respond. And he should be prepared." So yeah, I think it's safe to say this is not comforting for the markets when the markets hate uncertainty more than they hate bad news. At this point, it would actually be probably a better reaction for the markets if Israel does invade the Gaza Strip. I wouldn't be surprised if the markets actually bounced off of that because we've feared it for so long now. The problem is, in regards to a 10, 15, 20, 30, 40% crash, it really depends on two things. Whether Iran gets involved and the US gets involved, and what the implication is for oil. I've talked about this before, but the Strait of Hormuz controls 20 to 30% of the daily flow of oil. If Iran wants to shut that down, they could, and that would have severe implications for our economy. So that's going to be a lot of uncertainty throughout this entire conflict. If earnings were not bad enough and Google falling 10%, if possibly a US recession organically was not bad enough, you're basically getting blackmailed by Iran at any point. They could basically shut down the US economy if they restricted that flow of energy. Now, today in the NASDAQ, at the time of recording this video, you are down 2.4%. You are now breaking under this downtrending line of support that I just put out. Most recently, on October 23rd, you bounced off of this level and actually went higher by about 1.3% within the course of these 2 days. Now today you're falling under that. If you see a close under this and you don't see a bounce tomorrow morning, if you get another decline tomorrow from here, you're almost certainly going to fall to that 200-day moving average. In my personal opinion, that would be 337 on the QQQ. That would be a downside move of about 3.69% from here. But if the conflict were to escalate, you could easily start to see a much larger decline. And again, this would have a big effect on Tesla, even though this really has nothing to do with Tesla. It actually might be good news for Tesla if the price of gas was $10, $15, $20 at the pump. Imagine how many people would almost immediately switch to electric vehicles. A lot of the public does not realize gas prices, they go up and they go down. A lot of people think when gas prices go up, they're going to stay up. So this might actually be a net positive for Tesla if this oil situation were to actually get worse. Let's now get into all of your Tesla stock news you need to know here on the day today. Some of the biggest news today for Tesla, even what Elon and the Tesla team tweeted about. Quote, Tesla Model Y breaks single-year sales record in Denmark. With more units of the electric SUV that have been sold in a single year than any other car in the country's history. The record comes with 1 week left in October, giving the Model Y more than 2 months to extend its record even further. The Model Y was only launched in Denmark in the second half of 2021, but it has quickly become a favorite. It looks like so far 12,944 Model Ys have been registered by new owners this year in Denmark. This surpasses the 12,940 units of the Volkswagen Up that were registered 10 years ago in 2013. Jonathan Moffey wrote this article, Tesla's $1 trillion entertainment hub opportunity. He says that theater mode already allows Tesla users to stream services such as Netflix, YouTube, and Hulu while parked. Elon has an opportunity to turn the Tesla display into one of the most watched TV screens in the world. He says the time spent in the car could enable Tesla to take a significant share of the $416 billion streaming video market by 2030. Stellantis said on Tuesday it was temporarily laying off another 525 workers in Michigan, and General Motors is furloughing 139 workers in Ohio due to the UAW strike. But now today, according to the UAW, it appears to be moving towards a potential deal with Ford that could end the strike. We don't have any new details on this so far, besides potentially a 30% pay raise, maybe even 5% higher than what the UAW is asking for now, which is 25%. The current offer with GM, Ford, and Stellantis, as we know it, is for a 23% pay raise. Tesla now has 18 company affiliate accounts on X. Just today, adding another one, which is Tesla Manufacturing. The first V4 supercharger opened in Sparks, Nevada. Honda and GM are scrapping a plan to jointly develop affordable EVs, the companies said on Wednesday, just a year after they agreed to work together in a $5 billion effort to try and beat Tesla in sales. I think they have come to realize this is not going to happen. Ford is offering 3,227 hourly workers unpaid leave from the Louisville assembly plant in Kentucky due to the UAW strike. According to Consumer Reports, Advanced Driver Assist Systems, as far as rankings, number 1 is Ford and Lincoln's Blue Cruise, GM at number 2, Super Cruise, Mercedes-Benz at number 3, BMW at 3 as well. 4 is Toyota, 5 is Nissan, 6 is Volkswagen and Audi Travel, and number 7 is Tesla Autopilot. I would love to know who actually put this survey together and where they got their data from. Joe Tetmeyer shared with us a picture of some Cybertrucks. These boys look like they are fresh off of the assembly line, looking super good. Gary Black shares this, quote, looks like Adam Jonas from Morgan Stanley is the new #1 ranked auto analyst in the 2023 All-America Research Survey, replacing Rod Lash of Wolf Research. As you know, Adam Jonas has the highest price target with Tesla stock on Wall Street, with a 12-month forecast of $380 per share, down from $400 just before last earnings. In September, Tesla imported 642 Model S and Model X in China. This brings total sales in China to a total of 44,149. That is data from the month of September. Now, we don't have today's update from the yield curve inversion. Last we knew, as of yesterday, it was only inverted 19 basis points, 0.19%. What's been happening is a bear steepening. That is because the 10-year treasury is rising more than the 2-year treasury. So that's not good. It's putting a lot of pressure on the economy. After today's 10 plus basis point rise in the 10-year treasury, you may only be 5-ish basis points inverted. That would be my estimate, 5 to 10 basis points inverted. So you are getting very close to having your warning or recession warning indicator flashing. Normally, you get the recession just months after the yield curve is inverted and then uninverts. Tesla's inventory numbers for today look in line, in check with what we have seen recently. Model 3 is basically unchanged. Model S is falling. Model Y has seen a ramp up a little bit recently. It's falling over the past day or so. And your Model X has seen a big ramp recently and has basically been falling every day for the last week and a half. Tesla's Google Trends data, it looks like the Model 3 is picking up again, and the Model Y a little bit, ticking up 1 point here, whereas the Model S and the Model X are staying at basically their longer term trend. So all in all, this is what you need to know for the trading day today as a Tesla stock investor or just as a broader market investor. The video at 9 p.m. tonight will be very important. That is Eastern Standard Time. So make sure you guys are there. We're going to get into that GDP report coming out tomorrow, how that could affect the markets, as well as give you another update on any other developing situation we have from now until then. And as you know, much more, including the final numbers for Tesla option activity, in which are probably going to be some of the highest numbers we have seen in potentially years. So yeah, a jam-packed video at 9 p.m. I'll see you guys there. Hit the like button as well as subscribe to the channel if you made it to the end of this video. Consider sticking around a while if you guys would like to come get access to all of my trades. Every time I make trades, I send out alerts. Link down below in the description of this video. You guys enjoy the rest of your day. My name is Michael Tyler, and I will see you in the next one.